No, I just thought we'd start. Yeah, I think Steve and I tied for talking.
Oh, okay. All right. Well, what a great day to have you, Amelia, with
Yeah,
the ECB today. And I'm assuming you're still long-term bearish euro and cable. And
yeah, there's so much
you
going
welcome
on.
this little turn in euro to set up a shorting opportunity for you. And go ahead and just start where you wanted to. You're looking at
Okay.
rates, right?
Yeah, I just wanted to, you guys were talking about probabilities a little bit of interest rate cuts for the ECB and for the Fed. So I just thought I'd log in and look at the world interest rate probability chart. So here we are with the overnight interest rate swaps for the Eurozone, like what's actually priced in. So you can see the next meeting is September 12th. They take a break. They're on vacation in August. I mean, not really on vacation, but they just don't meet in August.
Okay.
And so there's going to be a lot of focus on the September 12th meeting. And you can see here that there's an 82.5% probability that they're going to cut the deposit rate
From
by
today's meeting. Personally, Amelia, I don't know about you, I would take the under of the 82.5% for September.
You would what?
I would take the under. I mean, sorry, this is betting terminology. I mean, I would take, if I had to bet against or for the 82.5%, I would bet against. I think the chances are lower than 82.5 that the market is currently pricing in.
You think the chances are lower that they won't cut 10 basis points?
Yeah, yeah.
Yeah, okay. So, but this is just what's priced into the market. So
I know. I'm just saying that I think.
Then you would be long euro if you don't think they're gonna.
No, because that's a different story. With because I would be long euro against what? That's a question. You know what I mean?
I mean, the S&Ps now, Steve.
Yeah, I would be long.
Sterling. Well, against sterling, because I have a very bearish view on sterling is my answer to that. But let's keep going. So, all right, we're just this, and then we have just looking at the U.S. in the debate now between a 50 and 55 basis point cut. This has moved all over in the past week. It's really interesting. Here's this red line, which is the probability of any size rate cut at the meeting July 31st, and it's 100%. So the market is definitely 100% priced, not a consensus survey, 100% priced for a rate cut. And so here we are, July 31st, it's priced in 82.5% for a 25 basis point rate cut and 17.5% for a 50 basis point rate cut. So yeah, that 50 basis point rate cut is going to be hard to get July 31st, it looks like, but the 25 basis point rate cut is really kind of baked into the market already.
Yeah, so let's get to price action and actionability. And the last time you were on, you were still negative. You know, I don't remember what your longer term objectives. I do. Yeah. You know, what really kind of stayed in my memory was, you know, your training and having been at a bank, that if you miss a move like this, like the, you know, long dollar play we have working here, you not only don't make money, you lose your job. So how are you keeping your job and holding these positions through days like this, Amelia?
There's a few ways. So I just wanted to show you this chart. We talked about this last time, and the next chart is going to be a little more interesting. I'm just setting up the next chart.
Oh, okay.
This is the DXY index here in white, and then these are the U.S. yields, 2 and 10 year. And you can see that when the Mexico tariff tweet by the administration came out threatening tariffs on Mexico, that was kind of really the nail in the coffin for the dollar temporarily, and also U.S. yields, which is interesting. And now we see a turn up in the dollar index a little bit, and yields are basically sideways. So, you know, we still have that safe haven bid here in the U.S. dollar, which I think will continue. And then we talked about this next chart. Oh, here it is. Last time, when people were asking, we were discussing something about the DXY and how it would go, and I just mentioned that the euro is 57.6% of the DXY index. So I just wanted to chart actually both of them together so you can see it's really important to get your euro view right for the dollar index view. And you see here is the dollar index, and this euro inverted on this side. So when this line is going up, euro is getting weaker and the dollar index is getting stronger. And you can see for the most part how closely they move together, which is why it's important to have a strong
Can I ask you this while you're on it, Amelia? Do you know why, you know, I sometimes use the Swiss for a tell. It's not as reliable as has been since, the unpegging. And, if I take you way back, I used to, follow the D-mark. It would be the Swiss D-mark against each other for early tells. How do you explain the fact that USD Swiss has not kept up with the strength in the Dixie?
US dollar Swiss?
Yeah, US dollar. But I'm just, just something I've been thinking about because I've been using it as a tell. While the dollar index is making higher highs, the US dollar Swiss is making lower highs.
Lower highs. I think Swiss, in terms of institutional trading, this is just a little bit of a background here. Okay. It's really hard in terms of the institutional trading, and the reason why. I want to say this the appropriate way. There is some mistrust among institutional traders around trading the Swiss franc who are around my age and experience in the market. Yeah. I do not like to trade the Swiss franc, and that was because of when they dropped the peg to the euro.
Yeah, I had the same reaction. Do you think it's
so
dramatic?
I feel like because Swiss managed their currency for so long from 2011 to 2015 and suddenly dropped the peg and it strengthened, that was a horrific day on the trading floor. Horrific. Yeah. Yeah. It was so hard. And so a lot of people my age with experience on the trading floor that day, if you ask them what's their main safe haven currency, we all trade yen instead of Swiss because we just don't trust Swiss. And also for my career, obviously yen was free floating, unmanaged. I've watched yen so closely in terms of my preferred safe haven that's not the dollar. Swiss, I never saw trade appropriately for years because it was managed. And so in terms of feeling a currency, it's hard for me to feel Swiss. So I don't have a good answer for you, but I know on the institutional side, some people do share my view as well.
I think that was a great answer. So I'm glad I asked the question. So I'm not going to interrupt you. I want you to go to, what you want to show, but really, because I felt the same way after that day. Why trade an instrument that can do that?
Exactly. And so
there's like the old days, Mexico devaluations overnight and people lose their memberships on the IMM.
Right. Certain brokerages closed. It was just, it was a very hard morning that morning on the
trade. Okay, sorry I brought it up.
That's okay. But anyway, back to euro, and here we are, we're rangy. Yeah. So a downside break of 111, the figure would be good, would be really huge. I think a lot of institutional traders really want to push euro lower. Obviously, that's hard to do with the Fed rate meeting coming up, as we discussed, July 31st. And everyone knows they're going to cut. So there's going to be this time where, I don't really see euro much lower until that September rate meeting when it looks like they're going to take, policy action at that time. And also things are going to get a little dicey for the euro post that, remember, because though we don't know how things are going to develop, and I'll speak about this in a minute, we do have Brexit deadline October 31st. And what we tend not to talk about for Brexit, this is another euro chart longer term, I'll refer to it in a minute, but what people don't remember with Brexit is we're obviously, the market and everyone's so focused on the UK side of it, but it affects the EU also. So October 31st is the hard deadline. And October 31st is Mario Draghi's last day as the ECB president. Christine Lagarde takes over November 1st. So can you imagine?
I was going to ask you.
So there's a little dislocation in terms of the handover, in terms of the Brexit timing. And I think that people, though we certainly trust Christine Lagarde, the market's super happy to have her as the next ECB president. She's dovish, people like that. It's more the uncertainty on the UK side and how that's going to impact the EU. And so I think both currencies are going to be affected into that October deadline unless it's extended prior to.
She also has a lot of experience in bailouts.
She does, yeah.
Right? So do you think that may be a reason some type of restructuring might have to occur in the Eurozone, and her expertise, that's her bailiwick, to be able to handle it?
I mean, we'll see. It's really hard to make any decision on how it's going to proceed, but also Ursula von der Leyen is a new EU president, and she's been very clear that she wants to work with the UK to maybe even extend the deadline. But, that's you know, obviously Boris Johnson just chosen yesterday as the prime minister, elected
Right.
prime minister yesterday. He's come out already with still his hard line, October 31st, do or die. So, you know, when you give the market a binary event risk, like no gray area, like yes or no, in or out, do or die, deal or no deal, you know, that's when huge moves take place. And we're only about 2.5 months away from that potential unless we get new information in the meantime. And so, yeah, things are going to get dicey in September, real dicey. You know, after Labor Day, full liquidity comes back into the market.
Right. And the Hamptons empty out.
Yeah, and the Hamptons come back to New York. And it's game on in September. Why? Because traders only have, you know, about 4 months before their books close to make their P&L if they didn't make it already for the year. So.
Okay, so you want to move on to?
Yeah.
You want to move on?
Term euro, you know, I mentioned the 111, the figure, 110, the figure,
yeah.
And then, you know, down here around 105. So, you know, if we can break 111, traders are going to push, but I don't see this move now. I see this, you know, more so for a September.
How much of a bear market rally do you think we could have in the euro? If, say, for example, we're getting a short-term low, they took out the prior low, kind of a stop on Amelia.
Yeah, I mean, I think we'll come back. I think, see this range here, the white, I think we'll come back to like, say 113. This is like 112.90, but like 113. I think market participants don't really want it to get way too much to the top side. They're trying to, you know, it was locked in this trading range for so long here that I think that's a good trading range. It'll just go back there. People don't want it to let it get away too much.
Okay, and how about cable? EG's been working, so euro's been weaker than cable. So how much of a pop can we have in cable into this Brexit time frame? And you know what you know what'd be interesting is to look at where markets were on the Brexit vote, which ended up being a binary event that you could have faded, but the initial reaction, I wonder where the pound was trading on the Brexit vote.
Oh, it was 150. It was 150 the figure, because people were positioned for topside break. I can show you that in 1 second, but I just look at this. This is a sterling dollar 3-month vol. So you see it collapsed in April. That's when they set the deadline. They moved it from April back to October 31st. So vol collapses. And then all of a sudden now Boris Johnson is elected, and look at vol just starting to climb in cable, because we know this 3-month vol, that's how far away we are from that October deadline. So it's, pretty interesting. I can show you a chart into, let's see, 06.
When the dollar reasserts itself, is it your view that cable has further to fall than the euro on, say, a blow-off wave to the upside in the dollar?
Yeah, because, I mean, if we look at the central bank, the Bank of England, Mark Carney is like the ultimate, he's the president of the Bank of England, or the chairman of the Bank of England. He's like the ultimate doomsday prepper with his, you know, financial market stability reports that put out the Brexit kind of like probabilities and scenario analysis. And so he's been really countering Boris Johnson in the media. You know, anytime Boris Johnson is like, everything will be fine, you know, Mark Carney refers back immediately to the forecasts, which are pretty devastating for a no deal.
Where did he talk about pound levels in that worst case scenario?
He did. You want me to show you?
Yeah.
What he said. Let's just go up to this presentation real quick. I'll show you.
Who is that model that you're using on your website?
Here's Mark Carney. He's the ultimate doomsday prepper, and let's see what the financial stability report says. So this is their warning about a disorderly Brexit. This is not their base case forecast. Their base case forecast is still an orderly exit, but the risks are rising for disorderly. And here's what he said. If there's a disorderly exit, it also, the Bank of England is the it. It also sees the pound in an unprecedented collapse below parity with the US dollar.
Wow.
Yeah, so that's not my forecast. Remember, that's the Bank of England forecast.
Okay, right. 117, is 117 closer to where you think it could go? I think that was what, the 08 low?
That was the, let's see, that was the 2010. That was like the October 2010 low. Let's see. This is, sorry, Rich, real quick before we go through this, because it's here. This is last week when Boris Johnson said he would, this collapse in the pound was when Boris Johnson said he would suspend Parliament right before the October 31st deadline just to get whatever result he wanted through Brexit. So the market did not like that, and it came back. It fell, and now it kind of came back on a relief rally that, oh, now there's a prime minister relief rally, and now we're just trading sideways because nobody really knows what to do. No one really has conviction on the upside of the pound. And then here we are. So this is Brexit. No, where is it? So wait, this is the low.
After the vote.
Yeah, after the.
That was it. So it was under 140 then.
23 years ago. Let me just pull it up. 2016. Oh, I think I have it here actually. Let me just pull up. I have a better chart here. Here it is. This is a referendum. So this is June 2016, June 23rd, 2016. So it stops trading at 150 the figure because everyone thinks there's going to be a topside break is how the market, how institutions were positioned. And of course there wasn't. And so they vote to leave, and we saw a huge collapse over the day and a half, 14.8% collapse in the pound.
And the low
was that's not really true. There was another collapse in October. There was another, here's the flash crash. So this is the referendum in 2016. And then there was a flash crash in the pound in October. And the low there was the 118.41.
So that's what they'll be gunning for.
Yeah, there'll be that flash crash low. So the two levels, the 1841, one figure 1841.
Okay, I know that we're focused on FX here. Any other markets that, like you say, the yen is your safe haven, preferred safe haven trade. Do you have a view on the yen? It seems to really want to dig its heels in and possibly not need to be a safe haven and head higher. What do you think?
Yeah, I mean, the dollar takes some relief from the yen in terms of safe haven trading, but yen is still the market. As I explained, my view on the Swiss, and a lot of people my age in the market at least share that view. Yen is the go-to safe haven currency. So I mean, I definitely, in the event of some real risk off, I definitely see yen at least back down to 107 the figure, and easily down there quickly, and we can even move lower if we have to, but it's just a risk off move. Yen is a little bit placated right now because the dollar has some strength, because central banks in the G10 are finally cutting rates. I mean, Aussie's already cut rates twice. The Fed's going to cut rates. ECB's going to cut rates, and most likely in September. And so New Zealand's cut rates. So some pressure in terms of global growth has come off because central banks are responding. But you see, that can
chart looks pretty good.
Yeah, there's not a lot of support. There's not a lot of support below, that's 107.17. Yeah, so below 107 the figure, there's not a lot of support, between 107 and 107.
So I think you were showing the Aussie, and I think the Aussie was challenging that flash crash that we had late in the year last year. That wick, that big wick you just showed on yen, all the currencies experienced that. I think it was New Year's. Aussie penetrated it, right?
Yeah, and Aussie's been really challenging. Obviously, I mean, I've talked a lot about it, like Aussie lower, and that did not happen. And part of the reason was, at least over the past month, there's been a large rise in iron ore prices, which really have brought Aussie higher. Last night, Westpac issued a new forecast for the Reserve Bank of Australia, which moved Aussie and the Asia time zone lower. They're now calling for another rate cut in October. So Aussie's already cut rates twice, June and July, and now Westpac sees another rate cut in October. And so when you just think about the timing, if you think Brexit in October, RBA cutting rates in October, maybe the the European Central Bank taking some sort of rate action, either cut or re-announcing a bond buying program in September,
It's so scary. I'll be burnt out by Halloween.
same time.
I won't be able to celebrate Halloween, Amelia,
We should
because
be
I'll
at
be
our
so
trading
freaked out.
screens on Halloween. There's no Halloween for us. The trick or treats are going to come on the trading floor,
wow.
not outside.
A good time not to be away.
Yeah. And I just wanted to point out, I'm watching this. This is just interesting. I'm watching Aussie Kiwi.
Okay, yeah, I am too. I was just going to ask you about it.
Yeah, it's just sitting here. It's really a frustrating trade, but I like to just watch it because it's been sitting above this 104, the figure, which is a big level.
Yeah.
It's just hovering there. It's not really moving up or down. It's very frustrating.
What's your bias?
I like it lower, so I'd like to short it, but on a downside break of the 104. So I'm not shorting it now. If it breaks 104, then I would short. And, you know, we're pretty clear till 103, the figure. Look at that. There's nothing here.
Yeah.
So 103, the figure, you know, would be honestly my target. Because once Aussie Kiwi moves, it moves pretty fast.
What's that?
Once Aussie Kiwi moves, it moves fast. So.
Yeah, it does. Yeah. So you think it's just going to negate the whole rally that we had a few months ago and take out that low?
Yeah. So,
okay.
But it's just a frustrating trade. I mean, there's nothing to do right now, but it's something to definitely keep on your radar screen, you know, to watch.
Okay. Any other crosses?
This is a strange one, but this is an example. It's just on my radar screen. I'm not entirely sure what to do. When I say I like it lower, it's kind of funny. But sterling CAD is interesting to me. And the reason why it's interesting to me, look at this giant move we just had through May to July.
Yeah.
CAD gets stronger. Look at how fast this was. Look at the trajectory of this. And, you know, one of the reasons for this is just because, look at that, almost 9%. One of the reasons for this is because the Bank of Canada, importantly, as we've just discussed, everyone cutting, like most G10 cutting rates, most G10 dovish, Bank of Canada is not capitulating yet. They are not turning dovish. So the Canadian dollar has been strengthening, especially against, obviously, the pound, as we see here, because the pound has so much uncertainty. So this is a good relative value trade of uncertainty and, at least right now, the Bank of Canada certainty. So until the Bank of Canada, I mean, it's already run a long way. I'm talking more in terms of Brexit. I know it's ridiculous to say that this might head lower, but if the Bank of Canada doesn't capitulate in September, and, you know, there's a lot of Brexit issues in September, the negotiations into the October deadline, you know, you could very well see this. You could very well see this lower.
Why hasn't the BOC joined the?
They turned dovish, yeah.
Okay, why haven't the BOC joined the central bank parade of easing and moving back towards QE again?
I think that they're not as, you know, the majority of their trade comes to the United States, and so they're not as affected by the global kind of China-US trade war. Also, they're obviously really impacted by a slowdown in the United States economy, should that occur more precipitously. But I think they're of the opinion that it won't. And so, you know, because while growth is slowing here, it is still holding up until we kind of see a payroll capitulation. We haven't seen that, but, you know, payrolls are a lagging indicator. All employment indicators are lagging, so that'll be the last to
yeah, that's interesting that they're, you know, since they are a major export economy, that they're not in the race to the base to even get a bigger edge on exports.
Yeah, they're not right now. It's a little bit surprising, but obviously, and that's the key factor to watch for CAD. You know, should the Bank of Canada turn dovish, then CAD's really gonna, you know, then CAD will really weaken. But right now they're not, and so that's, you know, while these trades could go either way, I don't want to sound unsure. I just want to sound like, you know, it could break much higher or much lower depending on Bank of Canada. And so I'm watching it because obviously this cross has moved super speedily.
Maybe it's because the Raptors, Canada won their first NBA championship.
Yeah, that's true.
They're, you know, pride before the fall, Amelia.
I know.
So, all right, what a great time now. And I really appreciate you coming in here and stepping in. It's always a pleasure having you.
Can I tell you really quick about a product? I'm going to offer you guys. If you have any interest, you might not.
I was going to bring you to your website. I'd like you to let people know how they could follow your work. And
yeah.
Okay.
Here's my website, marketcompassllc.com. And I have a new product. It's a webinar monthly, and it's the Global Macro Event Risk webinar, where for the next 3 weeks forward, I go through the major event risks and look at levels in the G10 currencies. And obviously, there's a lot of events, as I mentioned, coming up between now and October, especially. So I want to make you aware of that. I want to make you aware of timing and what I'm looking for. If you want to purchase the webinar, I'm going to give you 2 different discounts. So the promo code is DailyFX, all lowercase. And I'm going to give you today, I'm so excited. It's the 3rd time I've been on, so 3rd time's the charm for everyone. I'm going to $100 off the annual subscription rate today, and that'll bring it down to $300. And then if you just want to subscribe on a monthly basis, you'll get $10 off today, only for $30 on the monthly. It only
Okay. Take a screenshot of that, everybody.
Yeah, Daily FX is the promo code, all lowercase, and only till midnight Eastern Standard Time today.
Okay, and to follow Amelia on Twitter, just use her name, Amelia Bourdeau.
Amelia Bourdeau. And I'm on IG. If you watch IG story, Instagram story, I do update on markets there too, and that's at Market Compass on Instagram.
What a great time to have you here, Amelia, with Draghi, and thank you for sharing that we're going to have some opportunities that we don't have to chase the euro down here, and and all of us, and giving us a lot of time to, not a lot of time, but to really prep. And part of prepping is building up your war chest for the battle in October.
Yeah, so, and I put this slide out at the last presentation just quickly. There's a lot of uncertainty, and you have to remember, you have to control what you can control. So, people tend to think sometimes like, oh, markets are so uncertain, there's nothing we can do. And there are things you can do. You have to control what you can control. You have a strong event risk calendar. And as you just mentioned, you should start preparing some of the strategies that you can use, or the scenario analysis, and what trades you would apply.
Yeah, don't impulse trade. And a couple of months, you could already start thinking ahead. If this does that, what will I do into that scenario? So, the mental, psychological preparation for going into war and trading are pretty similar. So, Amelia, I would be glad to have you in the foxhole with me anytime. And really, I'm a fan. You have a lot of fans here, and may pips rain down on you in the fall, so that you have a bountiful harvest like the farmers to get us through the winter.
For everyone. Well, thanks for your time. I love being part of this community. And you can just reach out to me if you have any questions. My email is on my website, or you can just tweet it.
Okay, Amelia. Good hunting, my trading warrior sister. Thank you very much.
Thanks for your time. Take care. Bye, everybody.
Bye-bye. Okay, that's a wrap, everyone. See you for TGIF tomorrow. Good hunting the rest of the day. S&Ps, we're about 14 handles off the high of the day. The boy who cried wolf is saying, ow! Remember, just don't just count your pips, count your blessings. Adios, warriors.